Tax planning as a company owner. You'll find when you're running a company, you have several ways to get money out of a company, but the blurred lines between you as a company and you as an individual are some things that people get confused with. So let's look at the best way of drawing money out of a business. Again, I'm going to ignore IR35, I'm going to ignore subcontractors. This is for a standard, normal limited company. You'll always want to try and draw a salary from the business unless you have further employment. The optimum salary to draw at the moment within the current tax year is around about £10,000. The reason for that is you'll have your personal tax threshold and you'll also have the national insurance threshold or the lower earnings threshold. That would allow you to not pay any personal tax or any national insurance. Taking it a step on from there, the next way to draw money from the business is through dividends. If you want to be really tax efficient, you can still continue to draw dividends at a rate of £2,000 per year, and that is also free of taxation, free of national insurance. Now the reality is anyone who's living in the UK probably can't live on £12,000 a year, so let's look at what the next steps are. So if you extend that dividend onwards to go to the next threshold is up to 50,000. So you're up to £40,000 of dividend. Okay, the first 2,000 is still tax-free, but the next 38,000 in the current tax year is taxed at 7.5%, rising next tax year to 8.75% to cover some of the COVID costs we've incurred. But that's the sort of first higher rate tax threshold, up to 50,000. If you still need to draw funds beyond that, be mindful that again, the next threshold is up to 99,999. Again, a lot of our clients skirt towards that level, and the tax threshold is slightly increased, I'm afraid. It goes to 32.5%, only for the difference between 40 and 99,999. And this is where it gets a bit confusing. You have something called abatement of your personal tax allowance. Now, from 100,000 to 125,000, you have something called abatement. Now, abatement of your personal tax liability is effectively for every £2 you earn above 100,000, you lose £1 of your personal tax allowance. So the drag or the impact of that is effectively you're paying 60% in tax for any money that's earned during this threshold here, which is quite painful. If you're a standard employee, I'm afraid there's nothing you can really do about that unless you get into salary sacrifice or other ways to do so. As a company owner, you can control whether you put yourself here or here or here. Now, clearly, if you still continue to need to draw income beyond that, the next threshold is 149,999, and at that stage, you enter into 38.1% tax. So, again, if you do need to draw that level of income, just be mindful that this is getting rather eye-watering. This is dividend tax, by the way. Now, the thing to note, when you're distributing from a company, declaring dividends, this is post-corporation tax. So please be mindful that here, you'll still have corporation tax, corporation tax, corporation tax. So the comparative here is you're actually paying 26.5, over 51, and some scary figure down the bottom here that we don't want to talk about. So just be mindful when you're filling up the pots, it is almost like filling up a bath with income, 10, 12, 50, 100, 150. When you go north of that, we've got to look at some serious tax planning, pensions, other structures to try and mitigate that liability. That's tax strategy.